Welcome back to In the House with Beth and Ryan. I'm Beth, and this is Ryan.
Before we get into our 2026 predictions, I want to give a mention to the United Way and the Ultimate Burger Battle. This is the second year they're doing it, and Beth and I are ambassadors / judges for the Burger Battle.
We did the same thing last year. We were lucky enough to get to do it 2 years in a row. And
it's the best job ever.
We get to go and taste a bunch of different burgers at local restaurants, and $2 from each burger goes back to the United Way.
Yep.
And then at the end, there's a winner for the best burger.
Yep. And we have gone to 2 of them, which were excellent. Are You Serious and Royal Electric.
Mm-hmm.
And we are going out to another one today. And we have 5 more after that.
So this is pretty much the before photo of us.
Yeah.
And at the end of the month, we may be a little chubbier.
Yeah. maybe a little bit.
Yeah.
Okay. So that being said, let's get into 2026. Let's talk about business. 2026 will be better for some than others. And better depends on what side of the transaction you're in, because in real estate, there are 2 ends. They call it 2 sides to every transaction. So for every seller, there is a buyer of the house. And sometimes the market benefits buyers and sometimes the market benefits sellers. So just because...
In an ideal world,
it benefits everybody.
Everybody wins.
Yeah.
And things are a little bit more balanced. And
yeah,
the transaction ends up with both people feeling pretty satisfied.
Yeah, we're sort of in that market now.
Yeah.
But oftentimes the word better is associated to rising prices. So when someone says the market's good, typically lenders and mortgage brokers, even realtors say when the market is good, they're implying that the market is going up.
Right. But we can all agree, I think, having lived through the last 5 years, that sometimes that can happen too much, and it actually can create a really unhealthy market situation.
Yes. Yeah. And sometimes when the market was going up, things were not great.
Right.
So anyways, it's a qualifying point before we get into the numbers today that the market being better doesn't necessarily mean rising prices.
Right.
Okay, so that being said, do you want to why don't we get into the average price? And average price doesn't mean that the market is going up or down this amount.
Right. Because it's only measuring things that are selling.
Yeah, and it's only measuring the average. So if you have a mix of entry-level condos and luxury homes, ideally that they will average out to the middle or to the average number in the hundreds and thousands of transactions we have. But if you have a lot of transactions that are lower priced, it's going to bring the average down. And it doesn't mean that every house is selling for less. It means the average is decreasing.
Right. And we actually talked about this in our video last month on a smaller scale when we looked at neighborhoods. And we were noticing that some neighborhoods average price was up and some neighborhoods average price was down. And we could look at it a little bit more under a microscope and notice that in certain neighborhoods, certain types of properties were selling more, which was impacting average price.
Right. And so we believe in Guelph in 2026, the average price is actually going to decrease by 1 to 3%, and for a couple of reasons. The main one is due to the economy. We are on the edge of a recession. Unemployment is rising. Guelph, I think, is still below the Ontario and national averages, but it is rising. And this area in particular, Guelph, Kitchener-Waterloo, Cambridge, Brantford, Hamilton, are impacted by a lot of tariff talk. And as a result, it is unfortunately resulting in higher unemployment. And when you get to situations like that, people do decide to sell their house. And as a result, we get more listings on the market, and more listings on the market is beneficial to buyers.
Right. And in this type of an economy, we also see more activity at the lower price points as opposed to people selling in higher price points.
Yep.
So that also impacts the average price overall.
Yep. And the other side to that is that the government, as a result of looming recession, the government is lowering the overnight rate or the lending rate. And that has been coming down. It's come down 4 times this year at 0.25 per announcement. for a total of 1% this year.
And that has a greater impact on the lower price point end of the market as well. We're seeing more people, first-time home buyers, for example, choosing to enter the market than we have in recent prior years when interest rates were much higher. And then people in the higher price points are less impacted by those subtle changes.
They are. Yep. They may benefit from a slightly lower mortgage payment, but oftentimes they can afford those payments in those higher price points. They're less price sensitive. So, and then with the rates coming down, as Beth said, first-time buyers coming into the market. So we anticipate that more first-time buyers, and when first-time buyers come to the market, they are typically at entry-level price points. So we believe that that will have an impact as well on the overall average to bring it down.
And another note, I know we didn't really talk about this, but when you look at what type of new construction is being built, we're seeing there's not much, but what is being built is at the lower price point. So we're seeing more stacked townhouses, more entry-level homes. So that's also fueling that lower price point end of the market.
Yep. So overall average for next year, we anticipate it's going to decline. Now, we have a blog that we write on this, we'll link it below, but it takes you through a little bit as well. There's some charts in there that go through some of the numbers, and the average price has been declining slightly. It's down a little bit this year. I think it's
just over 3%.
Yeah, something in around there so far for this year. We anticipate that's going to continue for 2026 as well. Our next prediction for next year is that the overall number of houses that sell in Guelph, so not the average price, but the number of houses that sell is going to be a positive number. It's probably going to be in the range of 3 to 5% increase versus this year. This year had a really low number of transactions, and it's been a trend that we've seen over the past 5 years. Every year it seems to come down just a little bit further.
Right, from when things were really bananas in 2020, when they started to be really bananas.
Yeah. And down to more historically relevant levels. But we anticipate that next year is going to be a slight rise. 5%, we're not talking a huge amount of homes, but we're talking enough that it is going to make a bit of a difference in the market versus this year for a couple of reasons. I think there's going to be more
first-time home buyers.
More
people entering the market for the first time.
Yep.
That's going to fuel the number of transactions increasing.
Yep. And we're going to see as well, on that note, probably more and more condos hit the market, and stacked townhouses hit the market, and which ultimately means the prices are going to get cheaper, which will enable more first-time buyers to get into the market as well.
And as the numbers increase, we're actually going to be returning to more of an historical average in terms of what's going on. Like we've really seen in the last few years, the number of transactions decline because of a few different things. We've seen a lot of turbulence in the market, and people have felt uncertain. And then, of course, with tariffs and everything that's been going on in the economy on top of it, some people have just put the brakes on.
Yeah.
And we're seeing a very slow but steady return of confidence.
That's right.
And people are feeling confident again to move, buy, sell.
Yep. Yeah. Rates have become cheaper. It just makes it a little more reasonable for everybody, as opposed to these weird anomalies that we've had of things going on in the market. We're going to see a couple of things that are going to increase the overall stock and availability. We're going to have probably more investors decide that they want to list their properties. They're coming up maybe for renewal, which we'll talk about in a second. But they maybe have been holding on to them and maybe leaving them vacant or renting them at a loss, and have decided it's probably time to offload those. So we anticipate we're going to see more stock of those. Those are probably downtown condos, South End condos maybe.
Which, as a side note, it's a bit of a surprising thing to hear, I think, that people have rental properties unrented that are sitting vacant, particularly because in the recent past, we've seen really high levels of rent and very low vacancy.
Right.
And we've seen a bit of a shift just in the past, 6 months or so, where that is really changing, which I think in the big picture, it's a good thing.
Yeah.
We all know that the cost of renting for students or families or anybody who's renting is unsustainable. And so in the big picture, that's a really excellent thing to see.
Yeah.
But there are some investors who are feeling the pinch a little bit more than they may have in the last few years, and who may decide to liquidate.
Yeah. And for anyone following the news, the city of Guelph is likely going to pass a bylaw, a vacancy tax that keeps people who have houses that have been vacant for long periods of time on the hook for an extra tax for keeping it vacant and holding up that stock, to try to encourage them to either rent it or sell it off. So that's another thing that's probably coming the next little while too. And then another one to consider are the mortgage renewals. I touched on it briefly. Many people got into the current mortgage that they're in 2021, 22, and they're now coming up for renewal in the near future. And I think most of us know somebody who got a mortgage that was maybe just under 2%. I don't think we did. I'm not sure if we did or not, but and those people are coming up for renewal now. And those, sometimes when they got in at 1.99%, I mean, they're now looking at, in some cases, 4%, and it's going to double for them. And so it really makes it difficult to adjust to that all of a sudden. So we're going to see some of that happen as well, whether the people decide to sell and rent instead, whether they decide to sell and maybe downsize, whether they move markets, whatever. But we anticipate there's going to be more inventory there as well.
Yeah, which is really, again, big picture is an excellent thing, given the housing shortage that we have all been witnessing and living through.
Yeah, and I have a chart on our blog that we have. I have a chart, historically it's from Rate Hub, about interest rates. It's pretty amazing to see how it dropped all the way down and then how quickly it went up. And it's starting to come down now as well. So we also anticipate next year we're going to see a bit more strength, I think, in the $1 million plus segment, so the higher end segment.
And we've already kind of seen that starting this year. It might seem counterintuitive to hear that the $1 million plus market, or that we're predicting that the $1 million plus market will continue to increase. But the factor that's driving that's completely different than what's driving the lower price point end of the market. So at the end, I guess almost about a year ago now, December 2024, we saw the requirements change in terms of what type of a down payment you have to make for the $1 million plus price point.
Right. It used to be you had to have 20% down at $1 million, which was a real threshold then for people buying anything $1 million plus. That changed though, as Beth mentioned, in December of 2024 to the requirement being at 1.5 million in order to have 20% down. So
so that segment kind of between $1 million and 1.5, we've seen kind of slowly increase this year. And we expect that will continue next year.
Yeah, it historically between 15 to 20% of these sales in Guelph are $1 million plus. We saw that dip a little bit in the past few years, and then this year we saw it rise again a little bit to about the midpoint. So it's so far this year at 17% of the sales, but we anticipate that is probably going to get a little bit higher next year. And we have seen a bit of strength in, I don't know what you'd call it, luxury Guelph housing, like things that are above maybe 1.5 million in Guelph start to pick up. And I think part of the reason for that might be a return of buyers from the GTA. Sometimes, like I was talking about earlier with the people who have their mortgage renewing and maybe moving to a cheaper market, we might find some buyers in Guelph are coming from the GTA because they had to renew, and in order for them to renew, they had to move to something that maybe was a little bit cheaper. So they sell their house in Toronto and buy something a little bit cheaper in Guelph, but still get the same size and style and maybe neighborhood style.
And there are a limited number of houses in Guelph in that price point too. As you get closer to the $1 million mark, there's more, but as you get closer to the $1.5 million mark, there are far fewer houses in Guelph.
But there are buyers for them. There are few houses available, and there are few buyers to buy them, but they do move, and we have seen them move ourselves this year. We anticipate there are some neighborhoods, I guess if you want to get into neighborhoods.
We always want to
get into neighborhoods. Okay. We did a video last month that talked about neighborhoods and looking a little bit deeper than just the average price. And they're always our most popular posts. So just to touch on that a little bit, the Village by the Arboretum historically has about 30 sales a year. This year,
for those people who don't know, that's a kind of a niche neighborhood in Guelph. It's a 55 plus community on leased land.
yeah, and they have about 30 sales a year. This year, way under. I think through October, we were at 17 or 20 sales or something, very low. So we anticipate that's probably going to be an increase again into next year. I mean, it's a very niche market. It's probably very stable and predictable. So this year maybe was a bit of an anomaly, but we should see a bit of that come back. West Guelph, it's often the most affordable. You can often find things under $500 a square foot.
It's the least impacted by the GTA.
That's right.
It's obviously the furthest away
From-
kind of, to a certain extent, the least commutable, although that's not necessarily the case. But I think for people who are coming from out of town, it's not the first neighborhood that they think to move to.
It's it's a bit more insulated when you think about price volatility. So we anticipate that's going to do well next year. A lot of houses in that neighborhood and a lot of price points too. From entry-level condos to multi-million-dollar homes. There's a lot in the west part of Guelph. The South Guelph is always very interesting to me. The Clearfields neighborhood has really struggled this year, but this neighborhood, like the West End, has so many different options. You can buy entry-level condos.
A lot of students have
a lot of students in there. Yeah, you can buy multi-million-dollar homes there. You can buy everything in the middle. One of the highest volume neighborhoods in South Guelph is Pine Ridge. There's always things going on there. It's very family friendly. We anticipate we're going to see a bit of a surge in the south part of Guelph next year as well. A lot of people who are moving from the GTA want to be in the south part of Guelph because they can still get to the highway. They still have all the amenities. It still feels a bit suburban. And so it feels like it's a smaller version of some of the bigger areas, Milton, Mississauga.
Yeah, other suburbs. Essentially,
And in terms of student rentals, this is a really interesting one because
it's been a hot topic now for a couple of years.
Yeah, it's been a hot topic, but we're starting to see a bit of softness there. Enrollments are down. From international students, which takes some of the pressure off some of the rentals there. And there have been more and more and more properties that have come for sale, condos in particular on Gordon Street that have come for sale that have been vacant for a little while by their landlords, or the tenants are gone and they couldn't find somebody at the price they want or whatever. And so more and more and more of those are coming up, and it's taking the pressure off. So
yeah, it's interesting because in the past couple of years, we had a surge personally of students, parents who were panicking about where their student was going to live and wanting to buy a property for them to live in. And sometimes having to stretch a little in terms of the financial picture might not have always been perfect, but they wanted to buy in order to have security. Now we're entering a little bit of a different situation where it may still be excellent if you're in a position to buy something because you may be able to do it at a better price and potentially, build your investment a little bit over the years that your kid is at U of G. But your student could probably also find a rental. So it's a little bit more of it's more optional. Where before people were doing it almost out of panic. I feel like now rentals are available. People can find places to live, but it could also be a good time to buy because you may be able to buy at a better price and actually make a good financial investment.
And so for investors, it's probably less attractive because as rent prices come down, it doesn't make sense financially.
But if it's your own student. Paying rent. It might make sense.
And every year, as Beth mentioned, we do get a surge of calls from parents about this sort of thing. We have a blog on it as well, which we'll link below, that talks a little bit about the things you should know if you're considering buying a rental for your kid to live in with maybe a couple of friends or just on their own. Anything else? Anything else you want
to do? That pretty much covers it.
Okay, so we've got average price coming down, the number of unit sales going up.
A couple segments that are really feeling more active, the lower end and kind of the higher end.
Some neighborhoods that you might want to watch out for. Those would be the Arboretum, West Guelph, and South part of Guelph. And then a note on student rentals that they may not be as in demand as they have been, although they still are in demand every year, just not the frenzy that we've seen in the past couple of years. So
on that note,
on that note,
time for us to go and eat some burgers.
it's time to go. I think we're going to Montana's today.
Yep.
So if you have any questions on this, you can always give us a call. Visit us on our website, bethandryan.ca. Book an appointment with us, whatever is easiest for you, and we're happy to help.